The only strategy that you need to trade US indexes is to buy after pullbacks. In this video, I will explain to you a simple trading strategy to buy on dips. It works perfectly on US30, NASDAQ and S&P 500 indexes, and it is appropriate for beginners. Like this video, subscribe to my YouTube channel and learn how to trade indexes. First, let's discuss where, when and how to spot a pullback. The best time frame for the identification of valid pullbacks in indexes trading is a daily time frame. The first thing that we will do right here, we will execute a classic structure mapping. We will apply simple SMC ICT concepts to identify significant highs and lows. Don't miss my big end of summer sale. Get my VIP Signals Trading Academy and courses on a big discount. For more info, check the link in the description below. That is how our structure mapping looks. Pullbacks that we will look for should be formed after a formation of a new higher high. On our price chart, we can see that the index has recently updated the high. We see a new higher close, and then we see a consequent pullback. That is the exact pullback that we need. That is a pullback that we will trade. The only problem with that pullback though is that we don't know how long this pullback is going to be. After you spotted the pullback, you will need to find a level or the zone where this pullback will complete. In an uptrend, pullback movements usually last till the price reaches a significant demand zone, a significant liquidity zone. A significant liquidity demand zone will be an area where with a high probability of pullback will complete. In order to identify such zones, I suggest analyzing historic price action and look for the zones and levels that the market reacted to in the past. The first significant liquidity zone that I see is right here. It is based on our previous high, and you can see that analyzing historic price action, the market respected that zone multiple times. It was a significant supply area, the area where sellers were placing their selling orders, and for that reason there were so many bearish movements from that area. After a breakout with a high probability, that zone turned into a significant demand zone, the zone where our pullback may complete. The problem is, however, that we don't know whether that zone exactly will be respected or the index will drop even lower. So it is not enough for us to identify a single demand zone. We will need at least one more. The second one that I see is a significant demand zone that is based on our last higher low in this current bullish trend. That is our significant zone, the zone that is very wide and the zone that was respected by the buyers and by the sellers in the recent past. That will be the area where buying orders will certainly accumulate. And if the price neglects our current demand zone and drops lower, that will be our second zone on focus. After you identify this potentially significant liquidity zones, you will need to wait for a test of one of the zones. And you can see that what is happening with the index now. The index is now testing our demand zone. Final step in our trading strategy will be a confirmation signal. The only thing that is missing in our analysis is a confirmation entry signal. You can see that our demand zone is quite wide and we cannot buy the market blindly within that zone. We will need to apply multiple time frame analysis, and on intraday time frames we will look for an intraday signal to buy. On an hourly time frame, we can see in details how the price is testing our daily demand zone. And to spot a signal to buy, we will need to execute a structure mapping here as well. That is how my structure mapping looks. And you can see that from an hourly time frame perspective, our pullback that we see on a daily time frame is in fact a minor intraday bearish trend where the price consistently updates lower highs and lower lows. And the structure mapping here will help us to find an accurate signal to buy. According to classic SMC ICT rules, the last lower high in a bearish trend is a very important structure. That is a very important zone that we should always pay close attention to. While the market is trading below that zone, the market remains bearish. Our intraday trend remains bearish. The signal that will confirm a start of a new bullish wave is a violation of that bearish trend. Once the price violates our last lower high, that will be a signal of a change of character, a violation of a bearish trend and a start of a new bullish trend. Once we close above that yellow structure, that will be our signal to buy. And then we can anticipate a bullish movement to our current high. That will be the goal for the trade. I suggest setting a buy limit order on the retest of the level of the last lower high. That will be your best entry for such a trade. Stop loss should lie below the last lower low, and your target will be based on a current high. That will be your very perfect signal to buy. And look how perfectly this strategy worked after a previous pullback. Look how the price acted during our previous pullback. You can see that right here, the price updated the high, and then the market started to pull back, a correctional movement. On an hourly time frame, we can see that the index established a minor bearish trend. The signal that I used to buy US30 index was a change of character. I spotted a violation of this minor bearish trend. I spotted the violation of that, and I bought the market on a retest of the level of the last lower high. That was a great signal to buy, and you can see that then the index started to grow rapidly. Trend is always your friend, and I strongly believe that the best strategy to trade US indexes is to trade with the trend. Let me know your in the comment section if you have any questions. Also, do not forget about end of summer sale, VIP signals included. For more info, check the link in the description below. Also, traders, please watch my other videos.